Welcome back to another edition of Commodity Chat powered by Trader PhD. I'm head of market content Dawson Schmidt. Joining me again this week for this WASDE discussion is Nick Lawrence. He's our ag market advisor.
Good morning.
So Nick, yesterday, Tuesday, was WASDE Day, and going into this report, there was probably a little bit kind of a neutral feeling for some of these expectations for the old crop marketing year, the new crop marketing year, at least those balance sheets. Got quite a bit of a surprise for a certain area, or for especially on the wheat, and we're going to talk about it a little bit later, but just kind of setting the tone here, because I don't want to kind of gloss over this in the beginning, is that lower than expected ending stocks and a tighter balance sheet. Wheat futures surged limit up on both the July 26 Kansas City and Chicago wheat contracts yesterday. Really strong really strong day just in general for what we've seen comparatively for WASDE reports.
Yeah, it's usually not the wheat that that you get big limit moves and big price swings out of, but yeah, yesterday it seemed like the well here for the past I don't know how long the market's really catching on to the situation, the dire situation.
Yeah.
So
And
put an exclamation point on that yesterday.
yeah, definitely. And so, yeah, like I said, we're going to go back and discuss that. But let's first just start with the corn balance sheets, because, there's some kind of interesting things in there. You look at the old crop side of things. The ending stocks forecast was raised a little bit by 15 million bushels. That came from a 15 million bushel reduction in the domestic usage category on specifically the food seed industrial. Tried to do a little bit of digging. The USDA really didn't say exactly, where that came from. You can maybe look at just the high fructose corn syrup section if that's, a possibility of it's just domestic use trends that they've seen. They didn't really expand on that.
Yeah, unfortunately, I mean, were they just kind of using it to fudge some stuff around, or is it kind of like you mentioned, and I fully believe it, maybe a corn syrup trend type of a thing. Not 100% sure, but it is what it is.
Yeah, when you group in food and seed, it kind of gets a little mucky as to figuring out what exactly is going on over there. But wanting to focus back on this new crop balance sheet, the 2026-27, lots of changes here. We came in with those production estimates. Production estimates came in line with expectations, namely because that's kind of fill in the blank of what the ag outlook came in with for the trendline yields at 183, as well as the March prospective plantings report acreage of 95.3. They did have some adjustments, with those harvest acres, but largely production came in just below 16 billion bushels. And, that's still the second largest on record, according to what the USDA has been forecasting with this corn crop recently. And then also coming in with some changes to, lowering total supplies, of course, with that reduction. But in tandem, with tighter supplies come a little bit more limited demand, so lower feed and residual usage, and lower exports as well. And so kind of a tightening balance sheet. And I think, if you want to expand on this too, is, that we've been identifying that this 2 billion bushel range that we've been coming in with more recently with the U.S. corn balance sheet is kind of a neutral territory. And so I think it was kind of important at least to come in with numbers or that ending stocks estimate below that 2 billion bushel carryout.
Yeah, just slightly below it there, kind of kicking off the first balance sheet that we see to be just below that, and then does that trend tighter? To some of the stuff you mentioned before with world ending stocks, getting a little bit tighter. Demand is high. Production, forecast to be just a little bit lower across the globe, possibly even lower here in the U.S. Plus, we got substitute issues, with corn versus wheat, domestically and possibly globally on some production. So there is some there's some optimism to be had, even though it's relatively sideways type of a report. It's just the overall trend, the overall idea, that there is some optimism to be had.
Yeah. Lower stocks to use ratio overall for the U.S. think that's important. Global stocks even tightened up, but wanting to focus on, a little bit of what was said about the 2025-26 global crop. USDA did come in with a higher Brazilian corn crop estimate as well as a higher Argentinian corn crop estimate. They raised the Argentina corn from, I believe, 52 million metric tons all the way to 59 million metric tons. That's still conservative if you compare it to like estimates out of Argentina specifically. The other thing was too is that they raised the Brazilian corn production estimate from I believe 132 or 133 to 135 million metric tons. There's dry spots down there, but they're not really seeing a lot of issues, and that's kind of been the theme with what we've seen with Conab or Conabi, however you want to say it, as well as like StoneX, other private and public forecasters haven't really been sounding the alarm on that safrinha corn crop down there.
Right. I mean, and this is what makes a market, right? You got some people with some views and other people with other views. Right now, the USDA game, got a little bit more in line with CONAB there. There is their stress, there is their issues, and comments are running here in what, another 30 days or so.
Yeah, they're
Um,
going through believe it was about 40% was going through grain fill of that crop right
there
now.
you
So
go.
we're
Yeah,
getting through
so
it.
we'll find out here soon enough.
Yeah. So yeah, I mean, overall precipitation has been higher compared to last year, especially for Mato Grosso. So, if there are some lower yields down in like Goiás, who has seen the largest moisture deficits, could that be offset by Mato Grosso, which is the largest producing state in Brazil? That could definitely be a factor. And so, like you said, USDA is coming in more line with CONAB, and overall still going to look like it's going to be a good production year. Wanting to move along though to the soybean side of things, of course, lower corn production tends to bring higher soybean production. So we're increasing the overall soybean production forecast by 173 million bushels year over year. Kind of, but bringing in some higher demand with that. It was kind of interesting. So crush was increased to another record for the upcoming season, but they also increased total exports as well.
Decreased. Oh,
Decreased
total.
total exports for the 2026-27.
Okay. Yeah.
Yeah, it was kind of interesting because I guess with more supplies comes the ability to have better demand. I know they cited China a little bit as a reason for actually coming up on that estimate a little bit too.
Um, yeah. Interesting here. Just the how we are just continuing that transition into just more crush. I think the USDA cited um, just potential increase specifically to China. I think is what they're looking at there for their increase in exports for the 26-27, right?
I think so.
Yeah.
And
Well, like, why? I don't. I think they cited something about tariff relief, and maybe that battle will basically be over, and it's just some
yeah.
optimism there, which is they're making an assumption. It's not data driven, but whatever.
Yeah,
So
it's really interesting because even and we might actually flip back and forth with this soybean balance sheet because I do want to highlight the old crop or the current crop season too. But looking at what could be imported by China this upcoming season, the USDA also raised China's imports by or up to 114 million metric tons, and then China comes out with their crop supply and demand estimates this week as well, and they're actually lowering for the current season or for the upcoming season.
of course they are.
So I mean, there's kind of it's just trying to figure out what exactly they're doing. You
Yeah.
can't always just go by what China says. You have to actually see what they're doing. So we'll see if they actually are importing less or more. Just going through those monthly import data that we're going to get here moving forward. So yeah, kind of an interesting thing to look at because you look at the current marketing year. We're going to flip back to that. The USDA did a little bit of a shell game. I know you were kind of expecting this. Probably a few more people were expecting this too. Is that crush was raised for the 2025-26 crop. that was only partially offset by a decrease in exports. And so the total ending stocks forecast was decreased by 10 million bushels. And so we had a not only a lower ending stocks forecast for the current crop season, higher demand, even with higher production next season, is expected to, continue to bring our ending stocks forecast down to only 310 million bushels. So yeah, kind of seeing a tightening on the U.S. side of things here.
Yeah, supply was seen as ballooning slightly, and then now we're kind of just ebbing back down, back towards that 300. So again, kind of watching that overall trend, and kind of how that ebbs and flows. Um, I'll leave that right there. It's interesting. Next month we're going to be looking at some quarterly grains, and I've been trying to look at our yield numbers from last year. Are those accurate? Based off, and what could we get some surprises in these quarterly grains? Is it really less than 300? I'm trying to watch like hedging pressure and stuff like that as we rally and trying to correlate that a little bit, which, more, I guess, to come there. But yeah, ebbing and flowing a little bit, just above 300, could it be less? We will find out.
Yeah, I mean, I know it's not, you can't treat everywhere the same, but cash soybean prices alone have, on a national basis, have been rising with this increase in the futures price. So, I mean, there's definitely some demand for soybeans out there, and things are getting moved around.
Yeah, we put out some basis recs there, well, like a month or so ago, whatever that was. And we you specifically had seen basis was improving, and while price was at relatively high levels compared to the past couple of months, I guess. And so that just went to show that, and I don't mean off an entire tangent here, but it just goes to show that you know sales flows had slowed down, demand is high, so that they had to boost that bid to get grain to move. So my question is as we rally and potentially get another like higher here, um, how many bushels are out there to slow that down? What kind of hedging pressure do we see at the next resistance level? Obviously, I think as we've rallied here over the past couple of weeks, and those basis levels were trimmed mildly. Um, just because grain did move. But I don't know. It'll just be interesting to see. We'll talk about quarterly grains in a few weeks, but kind of just trying to get prepared for it now just a little bit.
Yeah, and I think that sentiment is not only here in the U.S. but globally. I mean, total ending stocks are projected to fall here for the upcoming season. Production is higher, but it's getting used. Crush is expanding globally among those major exporters. And you were asking me before we were recording if if we're just going to be swimming in meal globally, and that really doesn't seem to be the case. Exports are supposed to increase. Total consumption among major using countries are using up that meal, and so we're maybe seeing like an uptick by 1 million metric tons in that soybean meal carry out. And so yeah, I mean, just in general, soybean meal supplies seem to have the expectation that they're going to get used here moving forward.
Yeah, I mean, I was worried that the past growing season or two, um, big yields out of Brazil specifically, that we were just kind of like have these piles of beans sit around that were just kind of crushed into piles of meal. And that was going to be a little bit of a weight on the market. And yeah, so far it hasn't been.
Yeah.
So,
Yeah. I think everybody's in that same boat. And, South America is going to expand again this next year. So just really interesting to see that things are getting used up. Wanting to shift over to the cotton, U.S. cotton supply balance sheet. You and I were looking at this old crop balance sheet, for the broad part makes sense. It was kind of interesting still that USDA came in and lowered that harvested or raised the harvested area while lowering yields slightly for that last season. We're in May, so there's still a little bit of a shell game going on because ending stocks were left unchanged at 4.4 million bales. with the unaccounted category declining by about 2 million, I think, yeah, or 20,000, excuse me.
Yeah, a little bit, a little bit of a low price cure here, I think, on some of the demand portions of it. The and the USDA is expecting still like a relatively low planted area. Um, than the past handful of years. Except for obviously last year. Last year, increasing there just a little bit, but little bit of a low price cure. Hopefully, some cheaper, extended cheaper prices here is really incentivize some use.
Yeah, definitely. I mean, the overall balance sheet for the upcoming season is looking more positive. Yeah, we increased planted area, but abandonment rates did are expected to increase also, even with the increase in total yields. And so we're looking at overall lower supply for that upcoming crop, while exports are expected to increase still. So that's kind of an interesting one that we lower total supply, but yet we're going to increase demand on the U.S. balance sheet. And we're seeing it around the globe that some of our key importers, Pakistan, Vietnam, Bangladesh, and even potentially China here, if depending on how their crops turn out, might be looking for some more cotton. And so we might already be seeing that with already looking at high 80 cent cotton right now.
Yeah. Um, again, I think maybe the wheels I think turning there. I think just there could be some substitute for petroleum based products, that type of stuff too going on.
Mm-hmm.
I know that's not like as quick of a flip as what some have made it out to be, but anyway, hopefully, again, hopefully low price cures it has stimulated some demand, and potentially just petroleum based products maybe being a little bit more expensive has also helped that.
Yeah, definitely. And yeah, when you look at stocks to use ratio, we we were getting a little worried, and rightfully so, because I mean, we hit multi-year low prices in cotton this last season, before we started to surge these last couple of months. And that was just highlighted by, ballooning stocks to use ratios. We were the highest since the 2019-20 record, and now we're supposed to step back this upcoming year. So I guess that this highlights just a little bit better outlook for cotton in general, kind of like what we were seeing with like corn. Wanting to move on. Okay, we talked about wheat in the beginning, said we'd come back to it. So here we are. Wheat was the biggest kind of attention grabber for this report was, again, starting off with the easy one, the 2025-26 old crop or current season outlook. Honestly, I don't know. It made sense that the USDA, they did come in with a higher export forecast for the current season, raised that by 10 million bushels, offset it with lower domestic use. You made the point earlier, though, that I mean that's the lower domestic usage has been quite the trend recently.
Yeah, I think that has showed up in like the Miller's report or whatever. Basically, it seems like just overall flour needs, right? Milled flour needs, just generally speaking. The demand for those domestically, that product has been inching downward, right? As dietary habits, evolve and change, and the food pyramid has been turned on its head and really narrowed up the recommended use of that. Um, it's probably, and I think it shows it's gonna have an effect that we obviously haven't seen the end of it. I think this is just the beginning of that trend. Um, we may not see it in every single WASDE report moving forward, but I think overall, I think it should be expected that a lot of that flour type use. I think domestic demand for it, long story short, is just going to be trimmed.
Yeah, I mean we like cotton, we export a large percentage of our production for wheat. Um, but speaking of which, on the production side, looking again at wheat production, we've been talking about this nonstop for like the past 2 months is that, and many other people have, of course, and looking at, finally getting a number here from the USDA, I think was very telling with what the market was kind of looking for from this upcoming report is that the USDA came in with production at 1.56 billion bushels, and that's down 424 million bushels from the previous season and the lowest since 1972. And so that came well below all market expectations. Winter wheat specifically, what is expected to fall 25% year over year, mainly from that hard red winter wheat in the plains. And so I have a nice little thing here showing kind of where the estimates were from the industry. And I think even in the pre-WASDE article I wrote, I was like, it really seems like these estimates are really conservative for what the USDA can come out with. And I think the expectation was, USDA might kick the can down the road for another month, but they were not shy to really come in with this lower estimate this month.
Yeah, they slashed it for sure. And does that mean there's more adjustments to come?
Yeah.
I mean, take that big of a whack in one month. Could there be more to follow?
Or could they raise? Is this a base?
Or could they raise? Hey, we
Yeah.
went too far.
Yeah.
But what I'm saying is that's just generally, not what happens, right? You take that big of a cut down, you're usually not worried about a miss to the downside.
Yeah.
But it could. I mean, it could happen. Combines. Well, where there is wheat, combines will run, and I guess we can decide from there. But yeah, I don't know. With that big of a cut, could there be more?
Yeah, I'm by no means a wheat expert, but like in our last commodity chat, I showed a balance sheet scenario and I was like 1.65 billion bushels. And I thought that was even high, and I guess it was. I mean, it just goes to show that that a lot of these issues could be a little bit more deeper than what some of us were expecting. And so, that brought the ending stocks forecast all the way down to 762 million bushels, an 18% year over year reduction. So naturally, we're going to lower exports. I think we increased food usage a little bit for this upcoming season, which was a little interesting too. So maybe a little bit of a rebound or just a little bit of a shell game in general with that, just making sure things aren't going too far or too fast. But yeah, overall, I mean, this kind of sums up where we've seen this going. And so the stocks to use ratio, again, showing that we're trending or we're going the opposite direction of where we've been trending, which has been higher stocks to use these past few years.
And then the kicker to that lower production was more exports.
Yep.
They raised their exports, which you said they had to, which I don't think they don't have to do anything. But yeah, they raised exports by 10 million bushels.
Yeah, for that other crop. But yeah, globally we're looking at tighter scenario as well. I think largely driven by the US, but a little bit of a reversion to the mean among other global exporters.
Yeah, I mean they cited everyone.
Yeah.
They cited all the majors, right? So Europe, Argentina, Australia, all of us.
I think even Canada too. So yeah. I think some of that's also fertilizer driven, maybe fertilizer fear driven, weather related.
Another one of those things they did not expand on, that because a lot of times they, when they make a special note like that, they give like, a reason or kind of what basis or whatever you want to call it. But in this case, they didn't. But boy, I mean, especially with Argentina, Australia especially, you have to believe that has to do with the ability to plant back here over the next 30 days, whatever it is that, fuel, fertilizer, just all the expenses of getting it done. I think you have to believe it. That has to have something to do with it beyond just weather. I know Australia's struggled in parts of their growing areas, but as far as weather is concerned, but I think in this case, man, it just feels like it's more war input related than anything.
And also oilseed related. I did see a thing that, Australia is supposed to increase canola acres to, I believe, a record. So, I mean, you're taking another share of that total crop acreage out of wheat anyway. And so, yeah, I mean, they're seeing just a crop shift in general over there. So, yeah, I mean, I don't think it's out of bounds to say that for sure they can see some lower production over there in wheat specifically.
Yeah.
Wanting to move on to the last kind of section of the WASDE report, of course, looking at livestock. Big headliner, wheat or beef production continues to decline, going into 2027, all the way down to just over 25 billion pounds is expected to be produced next year. Low since about 2016, 2017 still. I mean, just seeing these strong declines. I think what was also interesting too is the fact that imports are also expected to be lower year over year. And so, I mean, we have a strong demand right now domestically for more imports, but the USDA made an interesting note that it's like, hey, the amount of pounds out there that we've seen these last couple of years might not necessarily be there come 2027, especially when you're looking at Brazil, Canada, Australia. Kind of an interesting note in general.
Dude, I mean, are we teeing ourselves up for a situation to where, the cattle market gets more bullish before it gets bearish? I mean, if that import share falls off, right? I mean, we've been able to keep our domestic market supplied, limping along, but supplementing that with imports. Um, but man, I mean, if Brazil and Canada, well, not just Brazil, South America in general,
Mhm.
um, Canada, Mexico wants more for their cattle. Um, and we have, that price starts to go up. We have any hiccup in the consumer. Plus, our herd starts to get tighter, like the USDA is projecting. I mean, they expect a herd increase. I mean, does that does it set up for like a more traditional? It gets more bullish before it gets bearish.
Yeah, I mean, we were on top of this pretty early, looking at Canada's
Yeah.
beef industry.
Oh yeah.
They're already starting heifer retention
Oh yeah.
well before us. I mean,
Mhm.
there's better signs of it from their government than signs of it from our government.
Who was it? That processes cattle in South America that decided they're having a little bit of trouble sourcing cattle. Not, I think the cattle there just think the producers trying to demand a higher price. Was that JBS or ADM or somebody down
It
there?
might have been JBS. I mean, they're just like everyone, they're struggling with margins. Cattle prices are really high, in general. So, I mean, availability itself, I think, is dwindling a little bit because their production is supposed to decline by about 2%, I think, this year too.
I guess all I'm trying to say is that we saw it in Canada. We kind of rung the bell on that a long time ago, and I'm just wondering if you're just starting to see some of the telltale signs of that um, in some South American areas. Like, is the low hanging fruit kind of there gone? Just a
Yeah.
little bit.
Yeah, I remember you saying that previously. Probably the last time we had this specific graphic up is like, yeah,
Probably.
we're trying to pick everything that's available right now. And actually, we already saw a little bit of a step back from what we're bringing in from Canada. So I think price differentials, it might be cheaper to get something from Australia even compared to Canada, because the supplies just aren't as readily available there as they have been in other places.
Now, granted, we had just the other day, like 2 days ago or whatever it was, just the other day, you had Trump commenting on his support for a reduction in beef import tariffs.
Hmm.
Um, and so that could help. That's a band. It could end up being a band-aid on that situation, right? That if that beef gets more expensive to pull in, um, does that get partially offset in some short-term time frame with the
Hmm.
tariff reduction? Yes, of course it does. But again, I just think overall macro, bigger picture level, it's just getting tighter.
Yeah. I mean, I think I made the comment before is that, um, it already seems like we need to, as much as people don't like beef imports, don't like getting it from certain countries, beef imports is what keeps our um, Americans keep coming back to beef when it gets too expensive for those higher quality cuts for what's produced here in the US. And to see that we're already not only like I think we need to import more beef essentially to meet consumer demand and keep prices competitive to where they don't trade down, to come back and see that we're going to import less
Well,
next year just
don't
because of
be
supplies.
don't be running away all of our listeners with saying we need more imports, right? And,
I know I hate to say that because
and like you know, I'm not going to wade too far into this water. But just I mean, I do believe in a free market. I do believe in specializing trading, those types of things. And obviously, I want our American producer to be as successful as possible. We do raise the best people on the planet, but the best people on the planet isn't needed for everything here domestically, right? And so we do need to backfill some of that. Again, specialize in trade. I do think that that reigns supreme. With everything, produce beef, industrial products, the whole gamut. Um, so yeah, we do need the imports, but again, trying to again, if you just let the market function, moving excess to scarcity and those types of things. Just let the free market do what the market does, and it'll incentivize production or disincentivize production. And just let it function, man, and it'll sort itself out. So
yeah, definitely. Well, while the beef production is declining, pork production also has been increasing. According to what USDA says, pork production is actually expected to rise to another record in 2027 to 28 billion pounds. So
feeding
we're
them.
we're still bringing a lot, bringing a lot in. I think a lot of that still has to do with, and I think they made a note on this, is that farrowings have been declining year after year, but farrowing efficiency has been increasing, so we're getting more pigs per litter, as well as one nice little graphic here is higher dress weights have been bringing in more pork production in general, even if we're a little bit lower on slaughter or about the same on slaughter.
Yeah, feeding them, getting them bigger. That was a function of I guess probably some fairly priced corn. Obviously, corn's rising now here just a little bit, getting to where maybe some of those efficiencies start changing. And meal was relatively depressed for quite some time. Um, Again, kind of rising here now, but um, yeah, feeding them,
Yeah,
getting them bigger.
definitely. But with that, exports continue to increase. I believe we're actually going to hit a record export forecast here this next season or this next year too, after declining from a record not too long ago. So we're still shipping them out too.
Yep.
Um, Nick, I know we kind of talked ad nauseum about the WASDE report. A lot of little nuggets in there when you're talking about old crop and new crop. Anything that you're kind of looking at as we move forward, non-WASDE related, weather related, or such?
Yeah. So I think obviously here short term today and tomorrow. Obviously, Trump G, we're the market's going to glean every bit of flesh out of that as they can. What's going to happen there? How's our relationship? Forming that type of stuff. Um, any sort of surprise trade deals or anything that could come out of it. But beyond that, kind of more just your more traditional kind of schedule here. Um, keep an eye on that, planning, planning pace and crop conditions report here moving forward. Um, how does everything get in? How's it coming up? Is El Nino developing? That type of thing. Is it like traditional El Nino kind of getting moisture here through the Midwest or not? And then as I mentioned kind of earlier, quarterly grains here at the end of next month. So those are the three big things. So developing crop versus developing weather versus quarterly grains. And we're about 30 to 45 days away um, from what is traditionally a very key seasonal time period for our markets. So stay on our overhead targets, stay on them, and have a plan to make some decisions here over the coming weeks.
All right. definitely some things to think about. I think we talked long enough. Thanks for listening. I'm Dawson Schmidt,
And I'm Nick Lawrence.
and this has been Commodity Chat from Trader PhD.